Alrighty, folks. Good morning, good afternoon, and good evening. Just watching the clocks. It's 5 a.m. EST. 14 hours plus in Tokyo, 16 hours plus in Sydney. Geez, what does that mean? What does that mean? Alrighty. Without further ado, we're going to switch right into business here with SPDas. He's patiently waiting, and I know you are as well. Here we go. SPDas, the trading floor is yours.
Okay, thank you, Igor, and welcome everyone as we begin, we are just getting started with the London session, trading day, first trading day of the week, and let's get started again with daily chart outlook for the euro. You've got to keep the bigger picture in mind now because the trends are just beginning to resume. So, what has happened between 95 and 1275, that that rally is an impulse, okay, and uh, and a couple of years of corrective wave, okay. I'm just writing it down for us to keep in mind or help us understand what the next phase could be. Ideally, the next phase is also going to be an impulse, and it is going to be around the same. In terms of timeline, it's difficult to predict, but in terms of magnitude, uh, it's if it is wave C, then it would be exactly equal, almost equal in magnitude, like wave A. That's the first one. So the larger degree trend is up. The corrective phase is potentially complete, and we've got enough proof since the last couple of weeks. So please prepare. We are already prepared now. We have entered already on towards the larger degree trend now. It's projected towards. It's projected higher towards the larger degree trend. Okay, and 95 until 1300. So that gives us 800 points. Correct? I 5 plus 3. Yes, 800 to 900 points. So roughly 1,000 points from 1.01. Yes, roughly 1,000 point brings us to at least it goes about 1273 to complete. All right, or 1,000 plus. Yes, it's 1.2 something. Even in the Fibonacci ratio, so can be done. Just a moment. 1.2, and before that it should be around 1.5 or something. That is 1.2. The first, so it's 1.15 region, at least 1.15. But believe it or not, this trend is just beginning, and we are going to see a corrective decline. I've shown the path here. The charts are telling us a story that one wave, the first wave of a lower degree, is in place now. Potentially is in place. We are, if you were there, even last week, Friday, and today's Tokyo Sydney overlap as well. What we were discussing is a is one more push higher towards the 550 range to complete that first wave. Let me just move it there. All right. And if it is already completed, then we are going to see a corrective decline anytime soon. Ideally, it would be three waves, and it should be coming towards a 50%. That is previous wave 4 of 1 lesser. That's a good place where the second wave would like to terminate. And if not the previous wave 4, then it's ideally going to test the backside of the inner trend line towards the 61.8%. So we are now looking for those who are just joining or haven't been able to capitalize on that particular rally, which aggressively we managed to deal, and also from 250 levels we got it again. So we're kind of sitting on some profits. In fact, early today was suggesting if you can book some profits out and take some money off the table, that would be better. But always don't exit complete positions. There is going to be one more chance given to us. And the range now to enter, trading point of view, is somewhere between 300 and 350. That is the range. Right, somewhere here, 300 to 350. Both are the backside tests again. So you never know if it's a retest of those trend lines on a daily basis or daily chart. But that would be a neat little wave 2 of a higher degree. And when I say wave 2 of a higher degree, the charts are telling us the story that the third wave is just about to resume at a larger degree, which would easily cover quite a few hundred pips from 300. All right. So stop loss goes to 1.0110 and our target we kept open on that. We have to find some short-term resistance soon around 550 zone. So let's be prepared for that. All right. So the next is, okay. Let's pick up gold, and then we'll come back to the dollar index. Gold story remains absolutely unchanged from what we are discussing on Friday. Remember, one trade last week, which was taken on the long side after being stopped out on the short side, we flipped the trades and we kind of booked profits there about 35 to 40 points. Sorry. And so after completion of that trade, the limit order triggered. I'm just updating the story, what has happened until now. So at this point in time, as we are speaking, we are aggressively short around 78.80 zone. Stop is around 28.01 and short-term target 27.35. And if you are kind of a medium-term or a positional trader, then prices are expected to go much lower towards 24.50, 2500 zone down there. All right. So that is the story, a larger degree story for gold. Let me flip the chart to an hourly. I think because prices dropped almost to 2750 after the Tokyo Sydney overlap, which was, which is absolutely in line with expectations. Now, let's do some short-term trend line and see if prices are back testing those. I think one of the trend line which I can see is an immediate trend line here, which is being back tested right now. The other one passed it just bounced through the trend line support. But these are short-term trend lines. You see how the prices bounce across trend lines. That was a buy zone support bounce. Now it is testing from the backside actually. So here some resistance should be coming in. All right. And on a still lower time frame, if we go back on a 15 minutes time frame, I think the decline here that decline could be the first potential impulse in the making, which we have been, because I can see it's wave one. Okay, let's redo. Uh, there is wave three. If it's a sharper, or 345 is already complete, but it's still not very clear. I would like to see this support being taken out. 2735. Once the support is being taken out, that I think it's going to be more clear. It's quite possible that the first impulse is underway now. Okay. Also possible that we've got wave 1, 2, and 3, 4, and 5 complete already. So if the impulse is complete, then let's find out where the resistance could be coming in. That's a 38-point touch right now. So it can possibly go towards the 61.8%, which is coming around the 71 mark. So maybe one more drop and then a rally. That's quite possible. So those who want to re-enter gold on the short side can do so around the 27.70 mark. That's why we are getting down on this timeline, because we have already taken shorts around 80 Friday. If you are wanting to re-enter, I mean, just allow some more space towards 70. Stop loss around 2801 and target. I mean, you can remain open, or you can just target 2735 and in the short term. But if you target 2735 from 70, the risk reward ratio will be just 1:1. Right? We are proposing the stop loss at 2801 and the target at 2735. So it's try and get some more, actually, maybe 1:2 or even higher. In that case, you'll have to hold the position for a few more days, and there's nothing wrong in it. Okay. See, one thing, when the frequency of trades are increased, it's not that the frequency of making profits will increase. Okay, because the more we trade, we need to also understand that each time we place a trade, we are taking a risk. So each trade has to be followed by a stop loss. So more number of trades means more number of stop losses, and more number. Equally important is the risk that we are taking. So, but then it's all up to the trading aptitude. If you're an intraday kind of a trader, you would love to do that. And if you're a swing trader, you would like to take a position and let it run. So it's at the end of the day, it is always trader's aptitude, what he or she would like to. Okay. Anyways, but for now, gold on the short side with a stop around 2801 is active. Potential target short term are 2735, and we are trying to capture a minor wave 4 potential termination seen around the 2400 mark or 2450. All right. Dollar index now. So as we were discussing about the euro possibly printing one more high, and you see the dollar index, that was an expanded flat. Let me zoom. This structure was an expanded flat ABC wave 4, and now we are seeing wave 5 push lower. So ideally, we are very close to completing that first impulse wave in the dollar index as well, which started from 110 aggressively. So now we have 107, and that's where the Fibonacci extension was also pointing. So things are matching up. One more proof, if you want to take, let me remove this arrow, is not required now. Okay, one more proof could be the RSI. If there is a divergence, should be, yeah, you see the bullish divergence also coming across nicely. So all in all, for short-term trading point of view, for those who re-entered around 108, oh sorry, 109, 45, 50, maybe you can have a couple of hundred points booked partially at least, and keep some open short positions. And for those who are wanting to enter, I think I'll just, I mean, it's not going to be too far. I mean, the 61.8%, somewhere in this region, 108.60 resistance starts, and it goes through 109 almost. All right. So that could be the re-entry point. Now, re-entry is not going to happen in one day. Now, I think it's going to go and test the 38.2%. Oh, it's going to test the 38.2% first and a decline later on, and then a rally. So that it's this today is Monday. Monday a potential bottom forms. Tuesday, Wednesday, Thursday, maybe 3 to 4 days, at least 3 days for a corrective rally to materialize. That brings us to the end of January series, and also potential highs and lows are carved around those times. So euro potentially carves a low, and dollar index potentially carves a lower top. Uh, and beginning the new series, that is, I think 3rd of Feb, it's all maybe start moving towards the respective third wave. Right? So that's the story for the dollar index, and as discussed the last time, dollar uh, Dow Jones, we will actually able to see more clear, but I think futures should be on right now. We are still looking to have the first impulse, but let's go on the daily chart. What is happening there? I'll have to flip the chart to a candlestick as well. If you see the pattern here, it is now beginning to turn lower, and I can see an evening star right away. Last session we were not able to see anything, but now the price action is producing an evening star. It is underway, the bullish candle, and that is actually called a harami pattern, where there was a swing just after the bullish candle, and now we've got a neat little bearish candle in the making. By the end of the day, if it closes where it is right now, that would be a complete evening star as well. All right, and it gives us a lot of confidence to see what is happening on the chart, because we've been calling for the shorts. Remember, 44,000. I think we have already sold around 43, 700, 800, and 44,000 range with a stop around mid 45,000. And the potential targets are towards 37,000 and 40,000 and 37,000 respectively in the Dow Jones. That is not the story though in the SPX. It's a different pattern happening. So we will evaluate in the New York session the SPX as well. For now, the coins, I don't know what the coins are still under. Oh, they are giving up actually. See, this is what happens. So at least for now, we have not lost anything or not lost major. All right, we just had our stop loss tied around 99,000. Please let's sit aside for a while. You never know if it is a corrective wave of the entire rally. Let me just check it out. Okay, it could be a correction of the entire rally as well. And if it is, then there should be five-wave decline. I think there is a four-way decline till now. And we look into a drop towards 96,000. Okay, and we'll also have a look at the RSI then. But I think RSI is way below 30. I mean, it could be also beginning of a new trend. So at least for one session, I would like to suggest we stay on the sidelines. Nothing is lost, okay, except for some time. We will get into the trade once the structure is more clear. It looks like a three wave until now, but we need to be more clear before committing on the long side again. Remember, we've been vouching and calling for this cautiousness. So let's remain a bit more cautious, all right, at least for a couple of sessions. And that would be in line with most of the coins. I think Ethereum as well, yes. So if you place the stop at 29, it is fine. It's still in the trade, but I think if it's a third 3,000, that was a small profit locked, but we are out of the trade right now, and it is suggested to remain on the sidelines at least for now, at least for one more session before the price action gets through and clear. I think this guy is better placed than Bitcoin. You know what? Let's do one thing. Because I can see a 333 decline, not a 333 decline actually, it's a 535. So it's a zigzag. If that is 5, a triangle, that was a bullish triangle, a bearish triangle actually. And there would be one more drop, I think. There should be, because we've got wave 1, 2, 3, possible wave 4 and wave 5. So considering the risk reward ratio, this Ethereum chart is looking better because the stop loss is just around 2,900. Okay, and prices are trading around 3,000 right now. So it's about, even if you place around 28, it's a couple of 100,000 points risk, and prices are converging converging good enough around the 78%. Okay, so that is a bit of worry. It needs to hold 78%. Okay, let's have the. We need to wait. Let's wait for one more session before committing. Okay, there's nothing wrong in it. As I said, buying after a confirmed signal is a better idea than committing a bit earlier. So we'd suggest a hold for, or stay on the sidelines, please, for at least one more session. Even for Solana, it would be the same because our stop losses were very tight. We have we have we have been taken out, but that is perfectly fine. That was a strong risk reward ratio. It is either carving wave two or yes, it is possibly carving wave two as well. On the 4 hour chart, it is clear about the 30% zone. So one more session and we should be good to go either way actually. Possibly we are going to go long again in each of them, but maybe one more session. Let's wait for one more session to get the 5 wave decline clear. All right, let's prepare for another rally. Okay, XRP has taken us out. The locked in profits are have been taken out, but it's fine. We've lost nothing except for the locked in profits. Okay, so again, let's stay on the sidelines and we'll be back again maybe by the next session when the price action is more clear, because that decline cannot go over here. That will be the stop loss, and you never know if we are going to get another opportunity to go long here. All right, one more session, and I think we should be good. The moment the portal is up, and we'll be coming up with the trade signals, and it will be reaching out to you in a flash as well. So please stay tuned on the technical updates that we will be announcing soon. And let's bring the current session to a pause now, and we'll be back again in a few hours to touch base in the New York session. And I'll be handing over to Igor now. Igor, back to you, brother. Thank you.
SPDas, thank you very much as well. Always a pleasure.
Yeah, thank you.
Alrighty, folks, we will be back for New York with IT Trader, a whole different perspective in the markets, institutional trading style, ICT concepts, and some philosophy, which is nice. We have a lot of fun there. We have a lot of fun here too. We love Elliott wave theory, GAN theory, all the different theories that can be applied. Looking forward to more analysis and a fantastic trading week. Trade safe and have fun. See you soon.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.